Silver is currently trading around $99 per ounce, which is absolutely incredible when you think about where we were just a year ago. We've seen silver climb from around $31 in January 2025 to where we are now, which represents one of the most explosive moves this metal has made in decades. But here's the thing, explosive moves like this don't last forever, and that's exactly why we need to have a plan. Let me start by saying this isn't about calling the exact top. Nobody can do that. Anyone who tells you they can time the market perfectly is either lying or delusional. What this is about is having a rational, data-driven approach to taking profits while still leaving room for upside. Because here's what I've learned after years of stacking silver. The people who make real money aren't the ones who try to catch the absolute peak. They're the ones who take profits systematically when conditions are favorable. So what are those conditions right now? Let's break down what's actually happening in the silver market, because understanding the why helps us figure out the when. First, we're in the middle of what experts are calling a structural supply deficit. This is the fifth consecutive year where demand has exceeded supply, the Oregon Group, and the cumulative shortage from 2021 to 2025 is approaching 800 million ounces. Think about that for a second. The market has been running a deficit for 5 straight years. Global mine production actually peaked back in 2016 and has been declining since then, bullion star. And here's the kicker, about 70% of silver comes as a byproduct of mining other metals like copper, lead, and zinc. So even with prices this high, we can't just turn on the silver supply like a faucet. It doesn't work that way. Now, let's talk about demand, because this is where things get really interesting. Industrial demand for silver hit a record high in 2024 of over 680 million ounces, and it's continuing to grow. Where's all this demand coming from? 3 main places. Solar panels are absolutely devouring silver right now. In 2014, only 11% of industrial silver demand went to solar. By 2024, that number jumped to 29%, the Silver Institute. The International Energy Agency expects solar capacity to keep growing at about 17% per year through 2030. Every single solar panel needs silver because it has the highest electrical conductivity of any metal. Some of the newer panel technologies actually require up to 50% more silver than the older ones. So as the world races toward renewable energy, they're racing toward needing more silver. Electric vehicles are the second massive driver. Battery electric vehicles use between 25 to 50 grams of silver per vehicle, which is 67 to 79% more than internal combustion engine cars, the Silver Institute. The forecast shows EVs will overtake traditional cars as the primary source of automotive silver demand by 2027, Yahoo Finance. We're talking about 13% compound annual growth rate in EV production through 2031. Every charging station, every battery management system, every power inverter needs silver. And then there's the sleeper that nobody's talking about enough: data centers and artificial intelligence. Global IT power capacity increased about 53 times from 2000 to 2025, the Silver Institute. All that computing power, all those AI servers, all those data centers powering our digital world require massive amounts of silver. And that demand is only going to accelerate as AI continues to expand. So you've got industrial demand hitting records, mine supply declining, and a deficit that's been running for 5 years. That's the fundamental backdrop. But here's where it gets even more interesting from an investment standpoint. The investment demand side has been exploding too. Silver ETF holdings rose 18% year over year in 2025, with net inflows of approximately 187 million ounces, goldbroker.com. People are flooding into silver as both an inflation hedge and a safe haven. And when you combine strong industrial demand with strong investment demand against a backdrop of declining supply, you get what we're seeing right now: prices going vertical. Now let's talk about where this could go. I want to share with you what the major banks and analysts are saying, because their price targets will help inform my exit strategy. Bank of America is forecasting silver could outperform gold in 2026 NA 500, with some analysts pointing to potential prices in the $65 range on the conservative end. But here's where it gets wild. Some veteran technical analysts have suggested scenarios of $100 to $200 silver by early 2026, the Oregon Group. Now, I'm not saying we're definitely going to hit $200. What I am saying is that the structural forces in play are creating conditions where triple-digit silver isn't just possible, it's actually probable if these trends continue. Think about what happened in previous precious metals bull markets. In the 2008 to 2011 run, silver increased 431%. It went absolutely parabolic. And the conditions we're facing now, with the supply deficit and the industrial demand profile, arguably rival what we saw back then. There's also this indicator I pay close attention to called the gold to silver ratio. Right now, that ratio has compressed to around 55 to 65 to 1 trading economics, which is down sharply from over 100 earlier in 2025. Historically, when silver gets momentum, this ratio can compress even further. In eras when global stockpiles were abundant, we saw ratios closer to 33 to 35 to 1 gold-silver. If we were to revert anywhere close to those historical norms with gold where it is today, you're looking at silver prices well into triple digits. So with all that context, here's my personal exit strategy for 2026. And I want to be crystal clear. This is what I'm doing with my stack. You need to make your own decisions based on your own situation, your time horizon, and your financial goals. I'm not selling everything at once. That's mistake number one that I see people make. They try to time the absolute top, hold everything, and then watch it all come back down. I'm using what I call a scaled exit approach. My first profit-taking level is right around where we are now, between $95 and $105. At this level, I'm selling about 15% of my physical holdings. Why? Because I've already more than tripled my money from where I was buying heavily back in the $30 to $40 range. 15% gives me some dry powder, locks in a meaningful profit, and still leaves me with 85% exposure if we continue higher. My second level is $120 to $135. Some analysts see the medium-term target at around $120 per ounce equity, and I think that's a realistic level where we might see some consolidation. At that point, I'm planning to sell another 25%. That would leave me with 60% of my original stack, but I'd have taken 40% of profits at excellent levels. My third level is $150 to $175. If we get there, and it's a big if, I'm selling another 30%. At that point, I'd be down to 30% of my original position, but I'd have captured gains at 3 different levels on 70% of my holdings. And here's the key. I'm planning to hold that final 30% long-term, potentially for years. That's my insurance policy. That's the portion that stays put, even if we go to 200, 300, or wherever this bull market ultimately tops out. Because I've learned that you never want to sell your entire position. You want to have some metal left for the tail risk scenarios, for the continued monetary debasement, for the long-term store of value thesis that brought most of us to silver in the first place. Now, what could change this plan? A few things. If we see a major correction, like a drop back below $70, I might actually add to my position rather than sell. Corrections are normal and healthy in bull markets. If I see signs that the industrial demand story is breaking down, maybe solar panel manufacturers find a cheaper substitute or EV adoption stalls dramatically, that would make me more aggressive about taking profits earlier. And if we see the supply deficit start to resolve, if mine production surges or recycling ramps up significantly, that changes the fundamental picture. But right now, none of those things are happening. The deficit continues, industrial demand is accelerating, mine supply remains constrained, and investment demand is strong. I also want to talk about some mistakes to avoid, because I've made some of these myself over the years, and I've watched others make them too. Don't panic sell on small dips. The market always has fluctuations, but reacting too fast can cost you Acadiana gold. We might see silver pull back $5 or $10 and people freak out. That's just volatility. It's normal in a bull market. Don't wait for the absolute perfect price. Trying to time the exact peak usually ends in disappointment. WWPMC. Silver is volatile. You might blink and miss the high. If you're already in profit and the price is strong, it's okay to take the win. Don't sell everything at once unless you absolutely need the money. Scale out. Give yourself multiple bites at the apple. This protects you if the price keeps running, but also ensures you lock in gains along the way. And here's a big one. Don't ignore taxes. Depending on where you live and how long you've held your silver, selling can trigger capital gains taxes. In the US, if you've held for more than a year, you're looking at long-term capital gains rates, which are generally more favorable. Keep good records of what you paid for everything so you can calculate your actual gain and your tax liability. One more thing I want to mention: diversification. As silver makes up a larger and larger percentage of your portfolio, you need to think about rebalancing. If silver has grown to represent too large a portion of your investments, trimming it down during a strong market phase helps you take profits while restoring balance APMEX. Most financial advisors suggest keeping precious metals exposure to somewhere between 10 and 20% of your overall portfolio. If silver has grown to be 30, 40, or 50% of your net worth because of this rally, that's actually a good reason to take some profits regardless of where you think the price is going. So, what am I watching to help me execute this plan? A few key indicators. I'm watching the gold to silver ratio closely. If it drops below 50, that historically signals that silver might be getting overextended relative to gold. I'm watching exchange inventories. When stockpiles get depleted and premiums start spiking, that tells you the physical market is getting extremely tight bullion star. I'm watching sentiment. When everyone and their grandmother is talking about silver, when mainstream media is running stories about the silver shortage, when your neighbor who's never invested asks you about buying silver, those are warning signs that we might be near a top. And I'm watching the fundamental drivers. Is solar panel installation still accelerating? Is EV production growing? Are data centers expanding? As long as those industrial demand drivers remain intact, the bull case stays strong. Let me share one final thought. The reason I'm comfortable selling portions of my stack at these levels isn't because I think silver is done going up. It's because I've already won. If you bought silver at $30, $40, even $50, and you're selling at 95, 100, 120, you've had an incredible run. Don't let greed turn a winning trade into a losing one. Secure some profits, enjoy the fruits of your patience and your conviction, and keep some skin in the game for the continued upside. This bull market in silver is driven by real, fundamental forces. It's not hype. It's not speculation. It's supply and demand. It's the energy transition. It's monetary policy. It's geopolitical uncertainty. All of those factors remain in place. So while I'm taking some profits, I'm not bearish on silver. I'm just being strategic. My exit strategy for 2026 is to scale out between $95 and $175, selling 70% of my holdings across 3 price levels while keeping 30% as a long-term hold. That gives me profit realization, downside protection, and upside participation. It removes the stress of trying to time a perfect exit, and it lets me sleep well at night knowing that no matter what happens from here, I've captured life-changing gains on a significant portion of my stack. That's my plan. You need to develop yours based on your own financial situation, your risk tolerance, and your goals. But whatever you decide, make sure you actually have a plan. Don't just wing it. Don't just hold forever and hope. Have target levels, have percentages, write them down, and when those levels hit, execute the plan. If you found this helpful, let me know in the comments what your exit strategy looks like. Are you selling now? Holding for higher? What price levels are you targeting? I'd love to hear from you. And if you want more content like this, make sure you're subscribed because we're going to be tracking this silver bull market every step of the way. Thanks for watching, and I'll see you in the next one.